Did you know that developers in Canada are increasingly shifting their focus from condominiums to purpose-built rental apartments? This shift is just one of the emerging trends in the Canadian real estate market, as highlighted in the latest PwC and Urban Land Institute report. Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy McKay. Let's get right to it. The Canadian real estate industry is navigating a landscape filled with both challenges and opportunities. From housing supply and affordability issues to the resilience of retail, student and seniors housing, self-storage, and industrial properties, there is much to consider for investors and developers alike. According to a recent report by PwC and the Urban Land Institute, which gathered insights from hundreds of industry leaders, these dynamics were discussed at an event at Toronto's Fairmont Royal York. The report highlights that financing costs and tariffs are making underwriting pro formas challenging, leading to cautious capital deployment with a strong emphasis on operational discipline. However, Kingset Capital's Chief Investment Officer, Colin Beriliuk, noted a recent uptick in activity and competition, with multiple bids being received for all asset classes. An intriguing trend is the pivot from condominium development to rental apartments. Developers are leveraging Canada Mortgage and Housing Corporation programs, municipal incentives, and innovative financing structures. With the housing affordability crisis expected to worsen due to limited supply, firms like Hazelview Investments are focusing on developing purpose-built rentals to address this shortfall. Kathy Black from Fiera Real Estate Canada mentioned that many developers are adopting a reset and reposition strategy, considering condo conversions to rentals or delaying launches. While residential rents have softened in some urban areas due to new construction supply, mid-market and family-sized units remain in high demand, with long-term rent increases projected to return to 4 to 5%. In terms of markets to watch, Calgary stands out due to its affordability, net migration, and robust home building, benefiting from its location in a business-friendly province with strong industrial momentum and no residential rent controls. Meanwhile, Vancouver, despite high costs and a slump in condo sales, continues to be a focal point for development, with developers like Fiera exploring opportunities in Halifax and Atlantic Canada for multifamily expansion. The report also points to the resilience of grocery-anchored and open-air retail, which continues to outperform expectations, and the growing momentum in seniors housing and medical office buildings. As demographics shift, the demand for better quality care and living standards in seniors housing is rising, with companies like Venn Asset Management expanding their footprint in this sector. Other noteworthy trends include the use of prefabricated and modular construction methods to accelerate housing supply and the innovative financing structures filling gaps where traditional equity and bank debt are constrained. Additionally, real estate companies are realizing gains in leasing, pricing, maintenance, and security through artificial intelligence, while self-storage facilities benefit from urban densification. With all these trends and more, the Canadian real estate market is certainly one to watch. It's an exciting time for investors and developers as they navigate these changes and capitalize on new opportunities. Venn has announced a significant milestone in its journey to revolutionize the multifamily housing market with the closing of a $52 million Series B funding round. This round was led by NOA and CIM Group, with participation from Group 11, Orange, Hamilton Lane, Latitude, Local Globe, and FinTLV. This latest funding brings Venn's total funding to $140 million, further solidifying its position as a leading technology platform in the multifamily sector. Over the past year and a half, Venn's momentum has surged as it expanded its intelligent operating system across more than 30 states, partnering with over 270 property owners and operators. These include some of the most prominent names in the United States market, such as Related, Bozuto, CIM Group, and Veris Residential. Venn now supports the daily living experiences of more than 500,000 residents, which has significantly boosted its annual recurring revenue, growing 9 times its previous levels. The multifamily housing sector is one of the most valuable real estate segments in the country, with approximately 1 in every 3 Americans living in a rental apartment. This translates into an asset class worth roughly $2.5 trillion, generating more than $500 billion in rent payments and $130 billion in property management spending each year. Despite this scale, building owners and operators historically captured little of the larger $10 trillion consumer spending ecosystem tied to living services such as insurance, utilities, mobility, connectivity, and retail. Venn aims to change this dynamic by giving operators the tools to transform buildings into consumer-facing brands that engage residents more directly. Venn's platform is designed to increase retention, enhance net operating income, and reduce operating costs while unlocking new revenue streams through services such as insurance products, credit-related offerings, utilities, cellular services, on-demand home services, and maintenance options. By centralizing these resident interactions, Venn's system grows alongside the broader services ecosystem as consumers engage more frequently through the platform. Looking ahead, Venn plans to expand its footprint to 1 million units by 2026, while deepening its investments in research and development. As it rolls out integrations and expands its open API, Venn is attracting interest from global consumer brands eager to access its extensive renter network. With its headquarters in New York and a product and research and development center in Tel Aviv, Venn's team includes veterans from leading consumer technology, hospitality, and real estate organizations, including Meta, IKEA, Salesforce, Sonos, and top PropTech innovators. Orba Kabza, co-founder and CEO of Venn, highlighted the potential of every resident interaction to create real value, noting that a deeper relationship with residents is worth nearly $1,000 per unit per year. Greg DeWerpe, partner at NOA, emphasized their continued investment in Venn due to the company's unique understanding of customer needs. Meanwhile, Dovie Francis, founding partner at Group 11, reflected on Venn's journey from its Series A round in 2021 to its current position, poised to transform the $2.5 trillion market into a $10 trillion ecosystem. JVM Realty Corporation has recently expanded its Wisconsin portfolio with the acquisition of Renfield at Pleasant View, a 300-unit luxury apartment community in Madison, Wisconsin. This strategic purchase from Continental Properties was brokered by Berkadia. Originally known as Springs at Pleasant View, the property has been rebranded to Renfield at Pleasant View under JVM's management. Located at 8504 Mansion Hill Avenue, the community spans 17.73 acres and was completed in 2022, showcasing townhome-style designs with private entries across 15 two-story residential buildings. The Renfield community offers spacious 1, 2, and 3-bedroom floor plans averaging over 1,000 square feet per unit. Each unit is equipped with high-end features, including open kitchens with stainless steel appliances, granite countertops, and undermount sinks. Further, the apartments boast high-end finishes, designer plank flooring, walk-in closets, large balconies or patios, and full-size in-unit washers and dryers. Select upgraded units also feature soaker tubs, subway tile backsplashes, painted accent walls, French door refrigerators, and custom closet organizers, adding to the property's appeal. Jay Maderi, president and CEO of JVM Realty, remarked on the acquisition, stating that Renfield at Pleasant View is an exceptional addition to their Wisconsin portfolio. He highlighted Madison as one of the strongest multifamily markets in the Midwest, citing limited new supply, robust employment growth, and a highly educated renter base as key factors driving JVM's investment decision. JVM Realty plans to leverage its award-winning management expertise and in-house marketing team to enhance the property's value and create a signature experience for both investors and residents. In addition to the luxurious apartment features, residents of Renfield at Pleasant View will enjoy resort-style amenities such as a heated swimming pool, a fully equipped 24-hour fitness center, and a clubhouse with a kitchen, TVs, lounge seating, and a conference room. The community also offers a business center, a car wash, valet trash, internet, and package delivery services. Outdoor amenities include a fire pit, outdoor grilling stations, and 2 on-site dog parks with a pet spa area, enhancing the community's appeal to residents seeking a high-quality living experience. The property's location in Madison's West Madison submarket provides convenient access to the Beltline Highway and downtown Madison. It's also near major employers such as Epic Systems, a leading healthcare software company that supports 13,000 jobs locally and is expanding to add 2,000 more. The area boasts over 232,000 jobs, with many more in development, making it an attractive location for renters. Additionally, residents benefit from proximity to top-ranked schools, healthcare operators, retail options like Westtown Mall, and outdoor recreation areas, including the adjacent 18-acre Midtown Commons Park. Renfield at Pleasant View marks JVM Realty's fourth acquisition in southeast and central Wisconsin, further solidifying the firm's presence in the region. JVM now owns and manages 21 communities throughout the greater Midwest. The firm is recognized as a leader in multifamily real estate investment and property management, operating a $1.3 billion portfolio across Illinois, Indiana, Kansas, Missouri, and Wisconsin. Since its founding in 1975, JVM has been committed to excellence and integrity, striving to be the preferred choice for investors, residents, and associates. Continental Properties, the previous owner, is a National Multifamily Housing Council Top 10 developer, owner, and operator of rental home communities, retail, and hospitality properties. Since 1979, the company has developed over 37,000 apartment homes across 20 states. Berkadia, the brokerage firm involved in the transaction, is known for its robust suite of services in the commercial real estate industry, providing support throughout the life cycle of its clients' assets. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy McKay. See you on the next one.